The Federal Reserve never allows any of these recessions to run their course. They never allow the market to really purge the economy of the excesses, get rid of the companies that need to fail so we can make room for those that need to succeed. Instead, the government just bails everybody out, props up companies that should fail, replaces one bubble with a bigger bubble, and the economy never really heals. And so now, we're going to have, 10 on the Richter scale kind of economic earthquake as a result of these imbalances that have built up because government has stopped it. And what's amazing is that so many so-called experts, in academia, on Wall Street and government, they still don't get it. The reason that I knew the 2008 financial crisis was coming is because I understood the mistakes that were made that led to the bubble that made that crisis inevitable. Well, all the people that were laughing at me in 2006, 2007, that had no idea what was about to happen, they're the same guys that are just as clueless today. They don't understand that everything the Fed has done since the 2008 financial crisis was a mistake, as they were complimenting them. Ben Bernanke was the hero. He was on the cover of magazines. He saved us. He didn't save us. He's the reason that we're in so much trouble. Him and then Janet Yellen and the policies that they pursued. Instead of pursuing free market sound money policies, we inflated these giant bubbles. And now we're at the point where we can't do it anymore because now the consequences of the inflation have become a problem. So now inflation is the problem. Well, how do you stop that? Well, you got to remove all the cheap money. But then now the day of reckoning that we refused to deal with in 2008, that we refused to deal with in 2020, now we've got to deal with it. But it's way worse. It would have been much better had we followed my advice in 2008 and just let the crisis run its course. No TARPs, no bailouts. Whatever banks failed, they failed. People lost money, they lost money. Let the foreclosures go through. It would have been much better to have sucked it up and bitten the bullet in 2008 than have to endure where we're headed now. It's way worse. The way we kicked the can down the road is we kept interest rates at zero. And so even though we had a massive amount of debt, it wasn't that expensive. In fact, even Janet Yellen last year, she said the amount of debt wasn't important. What matters is what it costs to service it. And she said with really low interest rates, we don't have to worry about the debt. Okay, well, what happens when interest rates go up? Like they're going up right now. All of a sudden, you have to worry about the debt. But remember, Ben Bernanke said a lot of things that turned out not to be true, including that subprime was contained and we didn't have to worry about it. But of course, when in 2009, when Bernanke was up on Capitol Hill, and one of the congressmen said, you're monetizing the debt, right? This is what banana republics do. Ben Bernanke says, no, we're not monetizing the debt because this QE program is temporary. We're going to sell all these bonds. And so it's not really debt monetization. Debt monetization is when a central bank buys bonds and then they stay on the balance sheet. Well, they're still on the balance sheet. We have almost a $9 trillion balance sheet. I said in real time that Bernanke was lying. I said there's no way these bonds are never going to get sold because once the government buys them, they can't sell them because who's going to buy them from the government? The only reason rates are so low is because the government bought all those bonds. The minute the government tries to sell those bonds, rates are going to soar. The reason they bought them was because we can't afford the high rates. But so how can they sell them? Because now there's even more debt. Look, that's why I called it a monetary roach motel. I said that from day one. I said, because once they check us in, it's impossible to check out. That's why I said we'd have more QEs than Rocky movies back then when we had QE1. And now we've had 4, and we're about to have the 5th round, right? But the thing about the Rocky movies, each subsequent Rocky movie was worse, right? The first one was a great movie. And then they kind of started going downhill. And so that's what's going to happen with quantitative easing. Not that the first one was good either. The first one was bad, but they're just going to keep getting worse. But the next one is going to be even bigger than the first 4 combined. And remember, when they finished QE3 and they said, okay, we'll never do it again, my prediction was that QE4 would be bigger than 1, 2, and 3 combined, and I was right. And QE5 will be bigger than the first ones. But, then the dollar just implodes. It can't survive that. But unfortunately, Bitcoin's going down with it. Bitcoin is another mistake. You got to understand that. There's no substance there. It's not gold. It's not digital gold. Why do you think Bitcoin is still at 19,000? Despite all the money that was spent hyping it up in 2021, despite that run up to near 70,000, Look where it is. Why do you think the Grayscale Bitcoin Trust that used to be at a 30% premium is at a 35% discount? Do you really think institutions are adopting Bitcoin when they're trying to unload it and that fund is trading at a 35% discount? The fund is down 80% from its peak. Is that a store of value? Is that a safe haven? No, it's not. Bitcoin is a highly speculative asset, but what are you speculating on? Because there's nothing there. There's no fundamentals there. You're just speculating on a greater fool. That is not what you want to do. If you really worry about monetary problems and inflation, and you're looking for a store of value in a safe haven, you don't have to reinvent the wheel. You've already got one. You've got real money. You've got gold. You've got silver. You've got monetary metals that you can own to protect you from inflation. But if you buy Bitcoin right now, all you're doing is helping somebody else get rid of their Bitcoin. The loser is the buyer, and the biggest loser is whoever buys the most and gets caught holding the bag. Inflation is not going back down to 2%. I mean, we'll be at 20% before we're at 2%. So I think a high inflation environment is not going to be friendly to tech stocks. It's not going to be friendly to the meme stocks or the cryptocurrencies. I think you need low interest rates and low inflation for those trades to work. So I think high inflation, I think that that's going to favor traditional value. So in the stock market, it's going to be, the old brick and mortar dividend paying companies, that people didn't care about during the bubble. Companies that have real earnings today, not potential earnings in the future, or no potential earnings in the future, like a Bitcoin, but companies that have earnings now that can pay dividends now, and more importantly, they can raise their prices so they can raise their dividends, because people are going to need dividends that go up with the cost of living. So if that's where the money's going to flow, businesses that have pricing power, that have real assets, that can pay inflation-adjusted yields that will give you a positive return. Now, I think, those stocks exist. I think most of them are outside the United States. That's what I've been buying for years. Knowing what the end game was going to be, I've been accumulating these types of stocks, preparing for the environment that we're headed into. And I also think it's going to be a commodity boom. Raw materials, natural resources, metals, energy, agriculture, all this stuff is going to be what's going up, not, the tech. And so people have to reorient their portfolios to get into those sectors. I think the emerging markets are going to be primary beneficiaries of what is going to happen here. And most people have very little exposure or no exposure to those markets because they've done so poorly over the last decade during this mania. So I think everything that worked when we could pretend inflation was low, none of that's going to work in the reality of inflation being high. We haven't had a major crash. We've just had a slow, steady decline, although maybe not quite so slow. I mean, if you look at, where we are, we're, on pace to have one of the worst years in the stock market ever. We just had the worst September since September 2008. So it was a bad month. But no, we didn't have a, Black Friday or Black Monday type event like we did in 1987 or a big crash like we had in 1929. But, the NASDAQ is down or was down before this morning, 35% from its peak, still, in a bear market. It's lost all that ground this year. Remember, the NASDAQ hit its record high in January, and so did the S&P and the Dow. So it's been a pretty a bad year, and we had a big sell-off inter-quarter. We had a bear market rally in the beginning of the quarter. But, if the Fed continues the pretense of fighting inflation, today's rally is going to be completely undone, and the markets are going to make new lows. I mean, the only chance the market has is if the Fed completely, does a 180. But that's not going to save it. It's not going to go back to what worked before. I still think a lot of these tech stocks, like the ones that, Cathie Wood owns and Arc Innovation, and these companies are not going to do well in this environment. I think we're better off without a central bank. I think even if you can argue for certain benefits of a central bank, it's not worth the risk. They're always going to exceed their limited mission. Power corrupts, and so you never want to empower a central bank. And I think with the technology we have today of the internet, we never have had less reason for a central bank. There's no reason that we can't go back to a gold standard without a central bank. Banks or private companies, you're into, the technology, the internet, the blockchain. It's very easy for banks and other institutions to custody bars of gold and then create, digital tokens, right? Tokenize that bar of gold and create currency, right? That is real money because it's backed by that gold, and everybody can negotiate with it. Everybody can use it as a unit of account, unit of exchange. It would be a store of value. We don't need central banks to print these pieces of paper so that we all have something we recognize. We don't need governments. We don't need central banks. We can create our own money, and we can digitize it so that gold will function as a much better medium of exchange and unit of account than it ever has over the past 5,000 years.